Uni-President China Holdings Limited, established in 1992 and headquartered in Shanghai, is a key subsidiary of Taiwan Uni-President Enterprise Corporations. It ranked as mainland China's largest producer of juice drink and third largest instant noodles manufactured, offering products such as milk tea, bottled juice, and coffee, and various noodle varieties under brands like Uni and Lao Tan, headquartered in Shanghai and publicly listed on the Hong Kong Stock Exchange since 2007. The company serves both urban and rural markets via extensive distribution networks. As it helmed in Chairman and CEO Lo Chi-hsien, who also hold leadership roles at Uni-President Enterprise Corporation and various affiliate companies. Key executive Xin Liu has served as president and executive director since middle 2016, overseeing operations across the beverage and instant noodle segments. Here are the three problem statements. First, market competition pressure. Despite being a market leader in instant noodles and beverage, Uni-President China faces intense competition from established rivals like Tingyi and new market entrants, which challenges its ability to maintain market share and pricing power. Second, rising raw material costs. The company is highly exposed to fluctuations in raw materials prices such as wheat and sugar, which can significantly affect production costs and profit margins, especially in a volatile global supply chain environment. Lastly, changing consumer preferences. With growing consumer awareness of health and wellness, Uni-President China must continuously innovate its product offering to meet demand for healthier, low sugar and sustainable food options, posing a challenge to its traditional product lines. There are three research objectives. First, is there any relationship between internal factors that affect the Uni-President China Holdings Limited performance? Second, is there any relationship between external factors that affect the Uni-President China Holdings Limited performance? And lastly, is there any relationship between internal and external factors that affect the Uni-President China Holdings Limited performance? Here are the literature review. First, performances. Business performance refers to how effectively a company achieves its financial and strategic goals. It is commonly assessed through indicators like revenue, profit, and operational efficiency. Good performance reflects strong management and market competitiveness. Second, liquidity risk is the possibility that a business may struggle to meet short-term financial obligations due to insufficient cash or liquid assets. This can disrupt operations and lead to financial stress if not managed well. And lastly, macroeconomic factors such as inflation, interest rate, and GDP growth influence the overall business environment. These external forces affect costs, consumer spending, and investment decisions, and companies must adjust their strategy accordingly. For methodology, sampling techniques, the study collects financial data from annual report Uni-President China Holdings Limited from 2014 to 2023. There are three independent variables. First, internal factors. Second, external factors. And third, internal and external factors. And for the dependent variable, there are company performances. Extract data will be calculated to financial ratios like ROE, ROE, CR, profit margins, and others. The ratio will be analyzed through linear regressions by using SPSS to generate description statistic, correlations, model summary, and coefficient table. The descriptive statistics show the average performances metric of Uni-President China Holdings Limited from 2014 to 2023. The mean return on assets ROA 6%, indicating moderate profitability. The standard deviation of ROA is 3.52%, showing relatively stable profitability over time. And lastly, the minimum and maximum value suggestions, occasionally performance volatility, possible due to market changes or macroeconomic shift. The correlation metrics reveal the strength and directions of the relationship between variables. there is a strong positive correlations between ROE and overall performances, suggesting that higher returns to shareholders are associated with stronger company performances. A negative correlation between liquidity risk and performance implies that higher liquidity risk may reduce performances. And lastly, macroeconomic factors such as GDP growth show a moderate positive correlation with performance, indicating the company's success is somewhat influenced by economic conditions. For the internal factors, R-square shows how much internal factors explain company performances. Example, if R-square 0.643, internal factors explain 64% of the variations in performance. Internal governance metrics like ROE have strong explanatory power. This suggests that company-level efficiency and profitability are key drivers of success. And for external factors, R-squared lower than Model 1, R-squared equal to 0.630. External factors moderately explain performances, while macroeconomic forces affect operations. Internal controls appear more influential. And lastly, for combined internal and external factors, R-squared equal to 0.611. Combination of internal and external factors explains 61.1%. This is because the combination of internal and external variables give the most complete pictures. This model confirms that both governance practices and economic conditions significantly impact performances. And then for coefficient table interpretations, Model 1, ROE beta equal to 0.41, significantly positive effect. Higher ROA increased performances. For operating ratio may also be included. If beta equal to negative 0.394, it suggests excessive liquidity might slightly reduce efficiently. Performances is highly sensitive to ROE, showing the need for capital efficiency management. For the external factors, interest rate beta equal to negative 0.12, negative effect, higher inflation harm performances. For foreign exchange, beta equal to 0.066, positive effect, growth in the economic support company performances. The firm is vulnerable to macroeconomic swing, emphasizing the importance of risk mitigation strategies. And lastly, for the combination of factors, internal and external, for current ratio, beta equal to 0.276 remain a strong positive predictor. Operating ratio, beta equal to negative 0.701, still significant, highlighting the negative impact of poor liquidity. For interest rate, beta equal to 0.005, confirm external environment relevance. ROE and GDP are strong positive predictors. Liquidity risk is a key trait. The model highlights the dual importance of managing both internal financial and external uncertainties. For recommendation, Uni-President China Holdings Limited should strengthen internal financial strategies, especially improving ROE and managing liquidity risk. Additionally, the company should monitor macroeconomic indicators and adapt its strategy accordingly to remain competitive in a dynamic market environment. For conclusions, the study found that both internal factors like return on equity (ROE) and external factors such as macroeconomic conditions significantly influence the performances of Uni-President China Holdings Limited. Liquidity risk negatively affect performances, while strong financial indicators and favorable economic trends contribute positively. The regressions model explains a substantial portion of performance variations, confirming that effective financial and risk management is essential for sustainability growth.